over to Leah Willis of Australian Ethical to lead us through this important session on ethical investing and its role today. Leah, Charles, Mary, thanks very much.
Thanks,
Thank you,
Toby.
Thanks
so much to Toby and the team at IMAP for the opportunity, and welcome everyone online. What a great way to continue to stay in touch with topics and to stay on top of education on professionalism during this really manic period, I guess. At Australian Ethical, we've been passionate about investing responsibly for well over 30 years, so I'm really pleased to be able to lead today's discussion. It is a reasonably short time frame for a few of us to get through some information, so we will move through quickly so that we allow time at the end for some questions that you might have of any of the speakers. Today, I'll be touching on the rise of responsible investing in Australia, the different approaches, and how you can actually navigate the increasing number of products to ensure that you align your advice with your clients' values. And particularly, although it doesn't seem as pertinent now given what's happening around the globe, but that emerging trend in the consideration of climate for investments and advices. We saw through the bushfires that this rising consciousness around how people thought about their investments, they thought about the impact and what they could potentially be funding. It became really top of mind. We had some record numbers of investors coming to us through that period. Obviously, once we come out of this, the world will have changed dramatically. The way we operate will change dramatically, but one thing that will still be there is climate as a real consideration. And so I really want to just touch on a few of those things today. Thanks, Toby. So what we've actually seen is there's been rising consciousness in the way people consume goods and services. And you've seen it in all our supermarkets where there's more products than ever before that have free range, green or other kinds of sustainable labels. People are more conscious of the impacts that they're having through their everyday choices. What we've also seen is this consciousness tip over into investment. And the Responsible Investment Association of Australia is the leading organisation that's been benchmarking this responsible investing space for well over a decade now. And in their latest report, what they saw was $980 billion worth of assets, professionally managed assets in Australia, now have some kind of green or ESG or ethical or sustainable overlay. That's almost $1 in $2 in Australia that's now being managed in some kind of responsible fashion. What's more pleasing for us is the growth in core responsible investment. I'll just quickly describe this graph so we're all on the same page. What you see is the big grey area is the total responsible investing market, and this takes in all different shades of responsible investing, from ESG through to what we would call the deepest green responsible investing, which is ethical. And then what you see is the breakout of the core, which is more of the deeper screening, the inclusions, the exclusions, the sustainable approach, and what we also see is ethical investing in this core space. That's been one of the fastest growing parts of responsible investing for the last decade. You can see that there's been this rise in products. We've actually seen about a doubling of the products in the responsible investing space over the last year. And what we'll see, if you just flip to the next slide, please, Toby. What we see is with this rising demand, you've seen more products come to market. With more products, what you see is more choice, which is great, more products than ever to be able to create portfolios for clients that have ethical considerations, but also you see this blurring of the lines in terms of product labels and descriptions that managers are using. So what we've been talking about in the advisor space for the last 12 months is talking about this responsible investing spectrum, or these shades of green, from light green through to dark green, starting with ESG integration, going through to screening, both positive and negative screening. What's the advocacy, the engagement that manager's actually having through their process, through their voting, through maybe getting together with market forces or the IGCC to really make a difference in terms of what companies are doing and how they're approaching their businesses. You see a more sustainability themed approach emerging, where people are looking for more impact, more forward-looking sectors, a more positive outcome from their portfolios. And then you see impact investing. Impact investing has really been a domain of private venture, private capital, but is one of the fastest growing and probably the space to watch in the next decade or so as you see more innovation It's not easily structured into a product or a managed fund at this stage, but it is probably one of the most interesting parts of the responsible investing segment today. Then what you see is we believe that ethical investing brings together all of these aspects of responsible investing into one portfolio. ESG is our first approach at screening the portfolio, but then we go deeper and have a look at all of these other dimensions of responsible investing. So that's why we would say that ethical is probably the deepest green approach when it comes to responsible investing. So the really important thing about this is that responsible investing is going to mean different things to different people. So understanding what each of these products deliver, understanding what the output of these approaches is, so that you can actually align and make sure that you are aligning your clients' needs or concerns or values with the recommendations that you're making to them. Thanks, Toby. Then we quickly look at the consumer demand driving screening. And the most important thing about this is you see that more products have come to market. There's far greater ESG integration in the marketplace than ever before. But what you've seen is things like tobacco, armaments, ammunition are probably some of the key things that ESG providers are now screening for. But the most interesting thing is that when it comes to consumers and what they're demanding from the screening is actually very different. In this RIA report, you look at consumers and what their preferences are and what they're searching for on the RIA website in terms of the sorts of things they're looking to consider or exclude in their portfolios. You see that fossil fuels and human rights lead the way. So I think this is a real a turning point in the fact that consumers are demanding and wanting different things than the ESG providers are necessarily providing. So we as managers need to go further to understand these concerns and be able to address them in portfolios. Then I'll just quickly move on to the next one. Thanks, Toby. I think it's really important for advisors to understand when it comes to responsible investing or ethical investing, when you start to put certain exclusions, both positive and negative screening across a portfolio, you end up with a very different outcome than your mainstream equities portfolio. And what you can see here is what we believe is a much more positive outcome to a portfolio. We exclude things that are very underweight to things like energy and materials, but heavily overweight to what we would regard as more forward-looking sectors, such as healthcare, IT and utilities, which takes in renewables. So from a climate perspective, we've been very aware of climate change for some time. We've been integrating it into our portfolio for over 30 years. And the way we do that is we say no to investing in coal, oil and gas companies. We absolutely exclude them, but we go further and we exclude big carbon polluters in the materials sector. And then we go even further by including renewables so that we're ensuring that we're able to make the transition. And this is where we've seen that over that period of the bushfires, we saw a doubling, if not tripling, of consumers switching their superannuation to us through that period. And we have no doubt it's because of that rising demand from consumers to really have an impact with their investments through the way, through what they invest in and the way they consider screening in their portfolio. So I guess I'd put to you, before I hand over to Charles and then to Mary, I'd put to you, how are you going to lead and guide your clients through this rising consciousness around investments? And how will you align your recommendations to the positive impact that clients are expecting to have on their investments to these critical social and climate and other issues that they're concerned about? So with that, I'll hand over to Charles to give you a quick update from a global perspective.